I salute you my follows. I hope you are continue to enjoying my video. As I told you before, we are here to give you what you need. Subscribe to my YouTube channel for more updates. Donald Trump crushed Bitcoin. Do this. What is future of this? We are continue to mine Bitcoin. Delving into the impact of Donald Trump's statements on Bitcoin involves examining various elements of cryptocurrency dynamics, market sentiment, and the political landscape, especially during his administration. Below is an exploration of how Donald Trump might have crushed Bitcoin, looking at different factors in 100 paragraphs. 1. Introduction to Bitcoin. Bitcoin, created in 2009, is a decentralized cryptocurrency that allows peer-to-peer transactions over the blockchain. 2. Political climate. The political environment greatly influences the cryptocurrency market, as regulations and public sentiment can sway investor confidence. 3. Trump's economic policies. During his presidency, Trump's economic policies focused on traditional finance, often expressing skepticism towards cryptocurrencies. 4. Market reactions. Bitcoin's price is often susceptible to external factors. Thus, comments from influential figures can lead to significant fluctuations. 5. Trump's comments. Occasionally, Trump publicly disparaged Bitcoin, labeling it a scam, which could lead to adverse market reactions. 6. Regulatory pressure. His administration's approach to regulation may have stifled innovation in the cryptocurrency space. 7. Consumer confidence. Statements made by prominent leaders like Trump can impact consumer confidence, crucial for the price stability of Bitcoin. 8. Cryptocurrency adoption. The hesitance to embrace cryptocurrencies at a governmental level during Trump's presidency may have hindered wider adoption. 9. Comparison with traditional assets. Trump often advocated for traditional assets like gold, suggesting Bitcoin lacked value. 10. Impact of social media. Trump's use of Twitter to communicate ideas and policies influenced public discourse, including that around Bitcoin. 11. Investor sentiment. Investor sentiment can quickly shift based on political news, particularly comments from the president. 12. Climate on regulation. The regulatory atmosphere during Trump's presidency was unpredictable, which is detrimental for emerging sectors like cryptocurrency. 13. Impact on miners. His administration's stance on environmental regulations could have affected Bitcoin mining operations. 14. Geopolitical tensions. Trump's international policies created uncertainty that could spill over into markets, including cryptocurrencies. 15. Bitcoin's volatility. The inherent volatility of Bitcoin makes it particularly susceptible to external influences like political statements. 16. Media influence. The media's coverage of Trump's comments can amplify their impact on Bitcoin's price. 17. Market speculation. Speculation surrounding Trump's opinion can lead traders to buy or sell, further driving volatility. 18. Public reactions. Investors reacting to Trump's comments can create a herd mentality that exacerbates price movements. 19. Comparative advantage. Traditional financial markets can create a competitive advantage for assets that align with governmental support. 20. Legislation uncertainty. Uncertainty regarding future legislation under Trump may have deterred investment in Bitcoin. 21. Long-term trends. In the long view, Trump's comments may have negatively influenced the Bitcoin market despite brief recovery periods. 22. Bitcoin's identity crisis. Trump's remarks could have contributed to an identity crisis for Bitcoin, influencing its public perception as a credible asset. 23. Relevance of fear, uncertainty, doubt, FUD. His commentary may have generated fear, uncertainty, and doubt among potential Bitcoin investors. 24. Widening the gap. His administration's impact could widen the gap between traditional finance and cryptocurrency. 25. Post-Trump analysis. Analysts have continued to examine how Trump's presidency shaped the cryptocurrency landscape long after his term ended. 26. Trump's legacy. The legacy of Trump's comments on Bitcoin is an essential consideration in assessing its future trajectory. 27. Investor education. The need for investor education has never been clearer, particularly with the impact of such statements. 28. Social implications. Societal views on banking and finance remain polarized, influenced by political discourse. 29. Comparative ecosystems. The strength of cryptocurrency ecosystems varies depending on governmental support. 30. Election impact. The 2020 election further polarized views around cryptocurrency, often intersected with Trump's stance. 31. Volatility amplification. Significant market events during Trump's administration amplified existing Bitcoin volatility. 32. Comparing sentiments. Comparing sentiment towards Bitcoin before and after Trump's critical remarks reveals the impact of leadership on investment confidence. 33. Bear markets. Comments from Trump and regulatory discussions coincided with bear markets for Bitcoin. 34. Stance on technology. Trump's skepticism towards technology developments could resonate through the financial sector, dampening enthusiasm for Bitcoin. 35. Influencing directions. Trump's influence helped direct heads of regulatory bodies to adopt cautious stances on cryptocurrencies. 36. Diversification of wealth. Trump's policies encouraged traditional asset allocation, making investors wary of alternative assets like Bitcoin. 37. Impact on altcoins. Apart from Bitcoin, Trump's comments also extended to alternative cryptocurrencies, affecting their valuation as well. 38. Risk appetite. Investor risk appetite tends to. What is future of Bitcoin? It will continue to mine Bitcoin? Exploring the future of Bitcoin and the cryptocurrency landscape encompasses various factors including technological developments, regulatory changes, market dynamics, and evolving public perception. Here's an analysis of potential future scenarios, challenges, and opportunities for Bitcoin presented in 50 paragraphs. 1. Current landscape. As of 2023, Bitcoin remains the largest cryptocurrency by market capitalization, holding a significant position in the financial ecosystem. 2. Mainstream adoption. The future of Bitcoin is closely tied to its acceptance by mainstream financial institutions and corporations, which could enhance its legitimacy. 3. Regulatory environment. The regulatory framework around cryptocurrencies is expected to evolve, impacting Bitcoin's operational dynamics and accessibility. 4. Technological advancements. Innovations such as Layer 2 solutions, like the Lightning Network, aim to improve Bitcoin's transaction speed and scalability, enhancing its usability for everyday transactions. 5. Increased institutional investment. Greater interest from institutional investors could drive up demand for Bitcoin, contributing to price stabilization and long-term growth. 6. Public perception shifts. As educational resources become more accessible, public understanding of Bitcoin may improve, potentially leading to wider adoption. 7. Integration with traditional finance. Bitcoin's potential integration with traditional financial products, such as ETFs or futures contracts, may support its growth as a recognized asset class. Thank you for watching my video.